How can the average Joe, let's say, get into a rental property, let's say in Florida. In Florida, it's becoming increasingly more difficult to be able to buy something that's in a properly cash flow, okay?
Insurance
is through the roof,
Yeah.
right? But you're having that, you're having problems in different markets. So again, as an investor, how do you shift and how do you adapt? There's a solution to every problem for the most part. You just have to be able to see it. In the multifamily example that I've given you, now you're having a whole wave of funds coming up with preferred equity plays, or what I like to call rescue capital.
Can I say something?
Sure.
I've been on site for the boardroom, the Q1 boardrooms or where we're recording this. I got here about 11 o'clock today. It is 4 o'clock right now. You are the fourth person to bring that up.
What, rescue capital?
Multifamily syndicators raising preferred equity as a rescue mechanism.
Yep. I mentioned it about.
That's how big this is.
There's a huge, huge
Can we
opportunity
explain
here.
what that is?
Sure. So let's say, for example, all right.
Wait.
I mean, for the audience, obviously.
Of course.
Kindergarten, marine explanation.
All right.
I mean, I know what you're talking about.
All right, so let's talk about this in crayon kind of terms.
Yeah,
all right.
cool.
So remember back in the day when you had the whiteboard and you have a fundraiser you're trying to raise, money for, right? Hey, we need to raise $10,000 for the new park at the school, right? Let's say you draw that little, the little funnel, all right? That's part of the capital stack when it comes to commercial financing or even residential financing.
Oh, you mean like the little gold thing? It looks like a thermostat?
Exactly.
Thermometer.
So you're filling up the money,
You're filling
right?
it up as it goes. Yeah, okay.
So let's say, for example, a lender is going to give you, just keep it simple, 70%, okay, of that raise.
So you said 10,000, so we're up to $7,000.
$7,000, right? So in this example, to buy this property, it's going to cost $10,000, and a lender is going to give you 70% of that, which is $7,000, right? That's part of your capital stack. Now you have to raise that extra 30%. That can come in the form of private equity investors, right? LP capital. So in a general fund structure or in a syndication, you're going to have your general partner who's in charge of the asset. That's that person who's operating the boat. They're racing the horse.
And
Okay.
typically, they keep like 20% or something.
It varies depending on the waterfall structure and,
Right.
and what they're doing for the asset.
Well, we'll just
Okay.
say that's the teacher for now.
That's the
They're in
teacher.
charge.
Right, they're in charge. They're the CEO. They're looking for investors to carry that vision through. So they're going to offer their investors a piece of the profit, okay, equity, in exchange for the invested capital. We need to raise 30%, okay, or $3,000. Let's say that syndicator, that fund raises that $3,000. Now you're good.